Hey, welcome back. It's Jason Walter here. I have a ton of housing market updates to share with you today. I'm actually really excited to do that. So let's go ahead and dive right into the video. Mortgage application numbers increased, and according to the Mortgage Bankers Association, or the MBA, total mortgage applications, which includes refis and purchases, increased 2.1% from 1 week earlier. The unadjusted purchase index increased 1% compared with the previous week and was 13% higher than the same week 1 year ago. The increase of mortgage application numbers in the US may be due to the fact that mortgage interest rates last week dipped by 0.1%. So they went from approximately 3.1% for a 30-year fixed rate mortgage at the beginning of last week to 3.02% by the end of the week. Joel Kahn of the MBA stated that mortgage applications were up by 13% compared to a year ago, which was around the time the housing market awakened from this pandemic-induced stall in activity. Most markets this spring continue to see robust demand, but activity continues to be constrained by insufficient inventory levels, as well as home builder challenges related to the ongoing shortages and price increases for building materials. This is an excellent point, so let's talk more about the increase of building materials, because I saw a recent post from the National Association of Home Builders, and they stated that home building supplies continue to remain at record highs. The record high home prices of building materials is not just for lumber though, because other heavily relied upon building materials, those prices have increased to record levels as well, and that's causing a lot of concerns with the real estate market. For example, prices paid for goods in residential construction, excluding energy, rose 1.7% in April and have increased 12.4% over the last 12 months. Building material prices have declined only 2 times since December 2019. And check this out, because this is absolutely crazy. So prices of steel mill products climbed 18.4% in April, following an almost 18% increase in March. So prices are up 55.6% year to date, and the month-over-month percentage increase set a record high for the 3rd month in a row. Steel mill products price volatility is greater than it has been at any time since the Great Recession. And here's a really good graphic showing the absolute explosion of prices for steel mill products since the fall of last year. So as you can see, the price was about $175 less than a year ago, and now it's skyrocketed to above $300. Absolutely nuts. And remember how I've been reporting that lumber prices have increased about 200% since last April. If you remember that, well, that number has increased drastically, and let me explain. The National Association of Home Builders reported that the price of lumber has gone up by more than 300% since April 2020 now. In fact, the prices of softwood lumber surged 6.5% last month, setting a new record high for the 3rd consecutive month. So lumber prices have skyrocketed 52% since last November. Another factor affecting lumber prices in the US is the fact that the US dollar has weakened compared to the Canadian dollar. Therefore, this affects the US buying lumber from Canada. So for example, compared to the Canadian dollar, the US dollar has depreciated 5% year to date and 13% over the past 12 months. Because building material costs have increased greatly over the past 12 months, this is affecting affordability. So according to the National Association of Home Builders chief economist, Robert Diaz, he had a really good quote here. He said, "Rising material prices are significantly driving up prices for single-family homes and apartments. Combined with expectations of rising interest rates, these higher prices place additional pressure on housing affordability, which continued to decline in the first quarter." This hasn't seemed to affect new home sales in the US, at least not yet though, because as of March, new home sales in the US surged 21% compared with the previous month and increased by 67% from a year ago. And by the way, a side note here, I'll post April's new home sales and new home construction numbers in about a week, and I'll be sure to keep you posted regarding that. So new home sales have been increasing lately, but have a look at this because mortgage applications for new houses actually decreased quite a bit last month. This is because the Mortgage Bankers Association announced yesterday that mortgage applications for new home purchases actually increased 31% compared to a year ago. However, compared to March 2021, applications decreased by 9%. So Joel Kahn of the MBA had a very good quote that I wanted to share with you today, and this is something, if you're a home buyer right now, you should be well aware of this. He said the purchase market remains strong overall, but low housing inventory and accelerating home prices have started to adversely impact purchase activity. Additionally, home builders have reported significantly higher input prices, which is contributing to the ongoing rise in sales prices and average loan sizes. In other words, the higher prices that home builders are paying for building materials is getting passed down to, you guessed it, home buyers. And of course, low housing inventory continues to be a major issue with our US housing market. So the National Association of Realtors reported their weekly report today and noted that as of May 9th, on a year-over-year basis, active listings are down 40%, but listings that are in pending status, meaning that the seller accepted an offer from a home buyer, the pendings rose by 52% compared to a year ago. In other words, demand continues to outpace the supply of houses available for sale. In the meantime, home prices continue to increase. So for the 4 weeks ending May 9th, home prices have increased 17% from 1 year ago. And with demand rising at a faster pace than the number of houses available for sale, the typical days in the market dropped to 17 days compared to 29 days from 1 year ago. All right, changing gears slightly, let me give you an update regarding commercial real estate. This is because I noticed that CNBC reported today that San Francisco is sitting on a record amount of vacant office space. The amount of available sublease office space in San Francisco more than tripled during this pandemic. By the end of the first quarter of 2021, the amount of vacant sublease space in the city has soared to 9.7 million square feet, and that's up from about 3 million in late 2019. Because of this, discounts are being offered to lure tenants, but the fate of the commercial real estate market remains uncertain as some businesses still allow their employees to work remotely, while others are doing a hybrid approach with less need for real estate. Meanwhile, the overall office vacancy rate in San Francisco climbed to 18.7% in the first quarter, and that's up from 6% from a year earlier. This is now the highest rate since 2005. If you enjoyed watching this video, then please hit the like button. I greatly appreciate that. And also consider subscribing if you haven't done so already. I post videos about how this pandemic is affecting our housing market. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day and a weekend. And I look forward to seeing you in the next video.